All right, Chris at thelendingcoach.com. I'm here with Joyce Repya from the city of Edina. She's a planner with the city and also with the Edina Housing Foundation. How's it going, Joyce?
Very well, thanks.
Good. So what's really cool about this, we actually just met yesterday, but you guys actually have a really good program where your foundation provides a second mortgage up to $60,000 if you buy a house in Edina.
Mm-hmm.
And you don't even have to be a first-time home buyer to get that. So I think a lot of people are thinking that they can't afford to live in Edina because you got really good schools, good area, great neighborhoods. So biggest question is how is this possible and why are you guys doing this?
Sure. Well, the Edina Housing Foundation started about 25 years ago when Edinburgh and Centennial Lakes condominiums were built, and we provided second mortgage money at that time to help people purchase. And at that time, the loans were anywhere from $11,000 to $18,000, but the purchase price of the condos were considerably less too.
Right?
Yeah, we did over 300 of those loans, and now about 34 of those remain.
Okay.
Yeah, interest rate was 5% simple interest, so we've taken that money, we've invested it, and now we have funds to provide second mortgage funding for not only a condominium, but single family, any owner-occupied housing in most of the city of Edina. There is an area that is excluded because the Edina Housing Foundation is a nonprofit. It isn't a city function. It's the function of a 501c3
Okay.
nonprofit. Yeah.
So the purpose that you're mainly trying to attract people to Edina versus other cities?
Well, there's several issues at hand. Young families, we'd like them to know that, we'd love for them to come live in Edina and occupy our schools and our neighborhoods. Also, our seniors, we'd like to give them a housing opportunity too, where perhaps they want to move out of their house and they want to purchase a condo perhaps. We've set up within the program a real beneficial program for them too to participate. So it's
Okay.
just families in general.
Yeah, I've been telling some people about it, and they can't believe that you guys are actually doing this because I've looked at some other like down payment assistance programs from other cities, and some other cities have some things that are similar, but nothing
And
comparative
this
with
is
it.
unique.
It definitely is.
Yeah.
So as far as the interest rate, I was checking out the brochure, and you have a below market rate program. So how does that portion work?
Well, there's two ways one can participate. Either you can pay interest on our loan, and it would be 1% less than the first mortgage, and the term would be the same as the first mortgage. Payments of the principal are deferred, and so you'd be making the interest-only payments.
Okay. So basically, if I got a 30-year mortgage right now at, let's say, 5%, then this would be, if I was at 60,000, it'd be a 30-year term, but the rate would be 4%.
That's correct.
Then I can make the interest payment if I wanted to. Is that correct?
You would need to. If you're opting
Okay.
for interest payments, you do need to make those interest payments.
Okay. And then I also noticed that you guys have a shared appreciation portion
Right.
or option, so you don't even have to make a payment if you
Right.
don't want to.
Right. What we do is we take the appraised value of the property at the time of purchase and we divide your loan amount into that and we get a percentage. That percentage goes into the note. Then when you sell the property, we compare the selling price to that appraised value and come up with your appreciation. You would pay the foundation the percentage that is in the note of that appreciation plus the principal.
Okay. Yeah, that actually helps a lot of people, I think, because I was kind of running some numbers on it. So basically, you still have to put a down payment down for like conventional FHA, but let's say I was going to buy a house for like $320,000, I could actually make my down payment like I would normally make, but then I could do either FHA, which you guys are approved with, or I could do conventional and then not even have mortgage insurance on the loan. So I could probably save a couple $100 on that, plus another, maybe 300 or 400 by not having that mortgage payment. So
Reducing that. The cash flow for the household can really benefit from our program.
yeah, that's a great thing. I think if we can get a lot of people learning about this, it's really going to help some people out here. So is there any purchase price limitations? Like you have to have a certain purchase price, correct? Or you can't go
Right.
higher?
The maximum purchase price is $325,000.
Okay.
Mm-hmm.
And then as far as income and asset qualifications, it looks pretty liberal on, you can still make a pretty good amount of money to qualify.
Right. We use the same income limits that the Minnesota mortgage program uses.
Okay. And that's like around 84,000 for a 1 to 4.
1 to 4, correct.
Okay.
Mm-hmm.
So essentially, it's going to work for most people. If you're super wealthy, you obviously don't need the
Well,
program.
you don't need the
so.
program then.
Right.
The way we size the loans, we require that the borrower spend at least 25% of their gross income on household income on housing.
Okay.
To include PITI and any association dues, whatever would be involved in their housing. And beyond that, then whatever you would need to complete the purchase is what you would qualify, up to $60,000.
Okay.
Let's say at 25% you can handle your total first mortgage,
Right.
then you don't need to come home to Edina.
Okay. Yeah, this is awesome.
Yeah.
So then once, so if somebody's looking at this, how long does it take to find out if you qualify, or is there any specific qualifications that you need, like credit scores or anything like that?
Well, we work with the loan officer who's originating the first mortgage. And so we receive all the information that is provided for the first mortgage. We need that as well.
Okay.
And so we're not going to be any more stringent than the first mortgage.
Okay. So pretty much right now it's all, FHA or conventional, so as long as you're going to qualify for one of those, and you just meet these qualifications, you're going to qualify for this.
Correct. Probably so.
Okay. And then, so let's say I'm looking at buying a house in Edina. Is it a couple-week process to find out whether or not I would qualify for this, or is it pretty...
We have never delayed a closing.
Okay, that's
So,
good.
yeah.
People appreciate that.
Well, and if the loan officer comes in with the information that we've set out in our procedures, and they kind of know whether or not their borrower is going to qualify.
Right.
So I really haven't had too many applications come forward that were, out of the ballpark and didn't qualify.
Right. Okay.
So it's really the first mortgage loan officer doing his homework and having the right information.
Right. Yeah, I was actually really impressed with the program. So basically, at this point, if somebody wants to check this out, they can get a hold of you. You sent me a whole bunch of documents, maps, the whole works.
Right. There is an area of Edina that's not included. It's south of the Crosstown Highway and west of Tracy, if you were to extend Tracy to the south boundary of the city. So that's an ineligible area. And I have maps that people could look at for that.
Right. Okay. Mainly because property values are probably exceeding.
Well, the foundation needed to exclude a portion of the city because the IRS said if you're going to encompass the entire city, it had to be a city function, not the function of a nonprofit. So that was the area of the city that was last developed, probably the largest concentration of properties that would not have an affordable element. Plus, a lot of it is taken up with the high school, Braemar.
Right. Okay. All right, Joyce. Well, I think that's all the questions I have, but I really appreciate your time here. This is an awesome program, so we're going to do everything we can to get the word out.
We're happy to get the word out, too.
Yeah.
Yeah.
So if you're watching the video, make sure you check out Edina and contact Joyce here if you need anything, or myself, and then help everybody out with solving the housing crisis. Forward this video on to everybody so we can get some people into some homes.
Thanks.
All right, thanks a lot.
Sounds good.